If you want to make money in the stock market, where are the areas that you should focus on and what exactly should you know to maximize your success? Let's go ahead and break it down. So of all the things, and I mean all the things out there that you should be aware of when it comes to investing, I have narrowed it down to just 3 key areas and I'm going to unveil them right now. So the first one is time, and it is not the way that you would typically think, and it really breaks down to 4 categories when it comes to time. The first one comes, well, with taxes. Okay, so I actually did a breakdown on taxes. I'm not going to spend a whole time or a whole bunch of time on this one, pun intended, but there should be a card somewhere on the screen for that particular video. But remember, when you invest for more than a year, you actually get a tax break here in the United States anyway, and you will pay, or you can pay, less in taxes. So people who invest for less than a year, you could actually be paying more. So time is a big factor. Don't forget that. So taxes is just one part of it, but also remember that when you are investing for less than a year, not only could you be paying higher taxes, your chances of profit are lower. Your chances for profit are lower. So there are different sources of data here, but the last sources that I had were for 5 years, 3 years, and 1 year. For 5 years, if you're investing for 5 years or more, your chances for profit were 97%. Your 97% chance that that stock was going to be positive. Okay, for 5 years, you had about 97% chance. If it was 3 years, it was right around 90. If it was 1 year or more, it was like 80 some odd percent. So, you hold more than a year, you had a greater chance of success. You hold it for less than a year, that was going to be the lowest chance possible. I think actually 1 year was about 79%. But I'll put all those numbers on the screen just so we can just double check all of those. But here's the thing. I want the highest success rate possible. So for me, if a stock is doing well, I want to continue to hold it, which is why, especially when you see me on public, you'll see that the majority of my stocks, especially if they're doing well, I continue to hold. O'Reilly's, Amazon, Alphabet, Apple, Microsoft. You have seen me hold those stocks since the time that I got that app 4 years ago because they do well. And I want to continue holding them. So my taxes are going to be lower and I have a higher chance of continuing to do well with those companies. So again, those aren't guarantees, right? Obviously something can happen with those stocks and they can fall. So again, no guarantees in the stock market. No, none of those had 100% chance, right? But keep all that stuff in mind, okay, when it comes to time. There's also that saying that time in the market is better than timing the market, especially for new investors. People trying like, hey, should I buy right now? Should I wait until a stock split happens? Wait until, something crazy happens and buy after a certain event or a headline? Right? If you are focused on, I'm trying to hold this for years, then that one tiny event, that one day is not really going to make that big of a difference. Also, we talked about this, you trying to jump in and out of particular stocks based on what's going on in the news, not really going to help you, and there's data to support that as well. We talked a lot about that several years ago, and we talked about the JP Morgan chart where you're missing, the 10 best days and 10 worst days, and how bad those days here and there can really drop your performance by missing them. So just avoid it. Stay in the market and really focus on it long term, because just the tax part of it by itself can absolutely wreck your performance and wreck your returns just because you're not paying attention to how long you have held a particular stock. So you definitely want to pay attention to that. And if you don't know how to do that or what your taxes might be, you definitely want to check out that video that I mentioned earlier. The next thing that you absolutely want to pay attention to, especially if you plan on making money in the stock market, is your process. And a part of that process, I'm explaining what process is and what to do when it comes to process. So when I talk about process, I mean, what are the steps that you're going to use to invest? What are the steps you're going to use to choose those investments? Why is that the case? And what is that filtering process when it comes to that particular thing? Think of it like a recipe. So if you're making a sandwich, or a burger or spaghetti, you should. Okay, I don't know how you cook, alright, but you should have a specific recipe. Every single time you have a specific recipe and it tastes the exact same way, or should, every single time, right? That is the way it is supposed to be. If you want to use a sports metaphor, think of it like archery, right? I want to make sure that, especially when I'm investing, right? I want to use the exact same process and get very, very, very similar results as close as I can every single time. So, like archery, I want to hit the target. If I don't hit the target, the bullseye every time, I want to be real close, right around it, right next to that bullseye arrow. If I'm not hitting that exact same target, that's where I need to be. If I'm playing basketball and I'm shooting a free throw, right? If I miss, I'm not trying to airball. I'm not trying to hit the miss left, miss right, hit the backboard. No. If I am shooting correctly, I get the right backspin, and I miss, it should bounce right back to me. That's it. Okay, that is the only way I should be missing, because my process, how I dribble and how I shoot, the way the backspin should be, it should bounce right back to me and nowhere else. That is the process. Okay, now to get that process correct, I have to practice. Now, we did an entire video on how to practice using paper trading. Okay, I'll make sure there's a card somewhere on the screen about that, but that really separates people who are very good at investing, regardless of what type of investing you're doing, and the people who get lucky. And those people who got lucky got real popular 2 to 4 years ago. Okay, because stuff happened in 2020, GameStop happened, and MC happened, and all that stuff happened, and people, boom, got popular. Stuff worked back then, and they didn't have a real process for it. It was just, hey, this thing happened and it worked this one time. They didn't have a process for it. So then when 2022 came, okay, 2021 happened, meme stocks happened, and 22 came, didn't have a process for it, and the market was down. And what happened when the market was down? You didn't have a process for what happens when the market was down, so they didn't know what to do. Then 2023 came, and they have a process for when you didn't have a meme stock and the market was up, they didn't know what to do. Right, and then they vanish, and that's what happened, right? So now they're just trying to scramble and using ChatGPT to find out what to do, right? So that's exactly what was going on, because you didn't have a process and you weren't able to practice enough times to know exactly what to do, which is why you go back to 2022 and you found out what we were doing, right? We were talking about companies like Hershey at the time, which were doing well. We're talking about the auto repair companies that were doing well at the time, and you can go back. There was a tweet back at the time where you actually saw my Roth IRA returns, and when the market was down 20%, my Roth IRA was up. Okay, we were making money when the market was down. Look at that, because we had a process and we had practice. And the reason now, I practiced years and years ago, and I still practice from time to time, but that's the thing, right? You practice these things, you get these things enough times to where you know exactly what to do and when to do it, right? When you don't practice, you don't know what to expect. When you don't know what to expect, you don't know what to do. When you don't know what to do, you do random things. You do unpredictable things. And when you do all that kind of stuff, you do not get the results that you want. You don't get the results that you expect. And that's not something you want to do with your money. Okay, so you want to make sure that you practice with other people's money, aka a simulator, also known as paper trading, which again is a video that we just did last week that you absolutely want to check out. Next here is the money piece of it. Now, money is the thing that is going to push your account forward, right? The thing you have to realize is, yes, you absolutely have to put money in your account, okay? But especially for new investors, you got to know that no, you can't put $50 in and expect $5 million out, or even $5,000 out. That's not going to happen. It's definitely not going to happen overnight. That goes back to timing, right? You guys have seen the screenshots that I've shown you guys of when I had like it was like 600 or 700% return on Nvidia. True, right? But and I've showed you guys the deposits, right? It didn't happen overnight. I started investing in Nvidia with like $50 a week here and there, $100 here and there in 2020. Okay, so started in 2020. The market was down in 2022, And I told y'all back then, check the receipts, check the videos, right? I said, hey, I'm just continue to hold NVIDIA. And that started on the patience part of it, which goes back to timing. Okay, and I just said, I'm gonna sit here and wait. Just sit here. I said the exact same thing about Amazon. Go back and go to 2022, type in 2022 Amazon building bread, and see what I said about Amazon. I said I was disappointed. I said I was upset at Amazon. Wasn't happy about what Amazon was doing, but I said I was not selling. I said I was gonna sit there and wait. Now Amazon is up, right? See what Amazon has done between 2023 and now. And you're starting to see that patience and that timing paid off. And that is what we are starting to see now. But the money piece of it was I didn't put in $50 one time. I did it consistently over years. Okay, so it's both the money and the timing piece, because I get a lot of the times, whether it is a brand new investor, a teenager, people who are, my age or older, say, well, I got $500 this one time, call it a day. Like, really wouldn't do that, right? It does take time, and it is usually best for you to invest on a consistent basis. My favorite way is to invest 15% of my income. Now that tends to be through a 401k, right? That is how the vast majority of my wealth has been built, right? But that is something that is consistent, right? And that is what you want to do when it comes to the stock market. That consistency is going to be the key, because that's what's going to multiply over and over and over again over time, which again brings us back to the timing piece, and brings us back to the consistency piece, which brings us back to that process piece. So these are the three things that always have to click together, because if one of these pieces is missing, if just one of these pieces is missing, your entire portfolio, your entire investing apparatus is going to fall apart. Because if you don't have a process, you can invest in one thing and lose it all. This happens far too often for people. You probably have heard some horror story about someone investing in something and losing it all. Why is that the case? Because they didn't have a process. They didn't have a good process, right? They went and invested in something they never heard of, had no idea how to research, and lost it all. And you're like, well, how did that happen? They have a process. They didn't practice. They didn't know how to practice. And they just lost it, right? Well, had you know how to practice, you could have did this in a practice session, lost the practice money. It's like, too bad. Glad it wasn't my real money, right? And that could have been it, and you could have washed your hands of it and put your money somewhere else in real life, right? Because you didn't have that process, that was it, right? So I want to make sure that you have each of those three pieces so that you can go out there and tackle whatever situation is going to be out there. So how exactly do you practice? And once you're done practicing, what stocks did you actually try or even practice with? You want to know exactly what those stocks are and how to practice. This is the video that you want to watch next.